Hello everyone and a very good morning to you. This is Rachel live from 𝐊𝐴𝐴 Studios and you're watching the early trades. The commodity supercycle and economic recovery prospects are fueling an equity markets rally. However, inflation expectations and virus concerns are capping the global equities gains. On that note, let us cast an eye over how market charter is panning out today. Taking cues from positive sentiments in the global markets, the ASX 200 is all charged up today, with index almost touching 7,200 mark during the early trade hours. Australian shares continue the upbeat momentum, tracking Wall Street's gains, with strong commodity prices set to boost the local Australian miners. Global equity markets rose on Friday while the US dollar tried to rebound from lower levels. That's as new data strengthened concerns about rising inflation and more heated economic activity that came from pent-up demand. A US Commerce Department report revealed that consumer prices rose 3.1% in the year to April, posting its largest annual gain since 1992 and comfortably surging past the Federal Reserve's target of 2 percentage points. Consumer spending also surged at an 11.3% annualized rate in the first quarter, positioning the US economy for strong growth as rising vaccination drive eases the pandemic's grip. Meanwhile, the dollar gave up almost all of its gains from early session on Friday as traders became cautious ahead of month-end and a holiday weekend after seeing new economic data confirm expectations about the recovery from the COVID-19 pandemic. Australian energy producers such as Boss Energy, Santos, Beach Energy and Woodside Petroleum are all trending lower today. That's amid oil price downtick. The energy sector is the leading drag on the ASX 200 today. Oil prices fell on Friday, with Brent crude falling below the $70 a barrel mark as strong concern about Iranian crude supply once sanctions are lifted outweighed the upbeat US economic data. Let us move on to the miners space now. The heavyweight Australian miners, Rio Tinto and Fortescue Metals, are trading in positive territory so far today. On Friday, iron ore futures in Asia closed mildly higher, but were down on a weekly basis on the back of persistent price control concerns from China. Iron ore's at 62% at FE cost and freight. China saw the May contract closed at 1,155 Chinese yuan. That's compared to a previous closing of 1,133.5 yuan. Meanwhile, copper prices rebounded as market participants bet that US spending plans on infrastructure would fuel shortages, shrugging aside worries about weak Chinese demand. Meanwhile, financial research firm Citi has downgraded financial year 2023 earnings forecast for the Fortescue Metals Group. That's according to data company Refinitiv. This is in reaction to the company's delayed start of its Iron Bridge magnetite project in Western Australia. Citi has cut their core net profit estimate by 3.9% to $4,669.7 million. On Friday, Fortescue raised its cost estimate for the project and set December 2022 as the new date for starting production. The delay is by around 6 months from the earlier estimate, and the project cost is now around $3.3 to $3.5 billion. On the other hand, Australian gold miners such as Gold Resources, Ramelius Resources, Silver Lake Resources and De Grey Mining are trading higher, catching up with the overall gold prices. Gold ended its minor correction and rose above the key $1,900 level on Friday as data revealing rising US consumer prices in April boosted bullion's appeal as an inflation hedge. Let us now zoom our lens on the major stock movers of today's trading session so far. Gold player Resolute Mining is the leading gainer on the ASX 200 today, tracking gold attractiveness as inflation ahead amid upbeat US inflation data. Meanwhile, in its latest AGM presentation, Resolute boasted ore reserves of 4.7 million ounces, with mineral resources maintained at 11 million ounces. Shares in Australia's leading grower, packer and marketer of fresh fruit and vegetables, the Costa Group Holdings, are soaring today. For the 2020 financial year, Costa delivered a $59.4 million underlying net profit after tax, representing an increase of 108.4% over the prior period. The total dividend payment for the year was 9 cents per share, fully franked. The Costa Group finished the 2020 year with a strong balance sheet and the capacity to continue the long-term growth agenda, with both organic and inorganic opportunities being pursued, as indicated by the company in its latest AGM update. Well, it's time for a very short break. Stay tuned with us. I'll be back in a moment to share more updates on the ASX listed trending stocks today and some latest news from the crypto space.
At 𝐊𝐿𝐴N TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. 𝐊𝐿𝐴N TV.
Hello, this is Rachel live from 𝐊𝐴N Studios. You're watching the Early Trades. We're discussing ASX listed trending stocks today. Hub24, Domino's Pizza and IPH are the leading ASX 200 gainers so far today. Meanwhile, shareholder registry firm Link Administration shares slip as it drops private equity group KKR's bid and seeks to list online property conveyancer PEXA. Link stated that it will take online real estate company PEXA public with an enterprise value of $3.3 billion, effectively rejecting the KKR takeover bid for the unit. Link says that the ASX listing will be done towards the end of June this year. Reportedly, the board of PEXA decided to launch an IPO after a deal to be acquired by private equity investment giant KKR fell apart. KKR had offered $3.1 billion to buy property settlements firm from its owners, including financial services group Link. Notably, the Link Group is the largest shareholder in PEXA with a 44.6% stake in the company, while Morgan Stanley Infrastructure Partners and the Commonwealth Bank of Australia hold 40% and 15.3%. The IPO will see Link retaining its stakes in the company, while Morgan Stanley Infrastructure Partners will offload its entire shareholding. The third shareholder, the Commonwealth Bank, will raise its stake to 17.4% from the existing 15.3%. That's according to an Australian Financial Review report. As a result, Link Group will continue to remain the largest shareholder of PEXA. Also, intelligence software provider Nuix shares have hit a record low, trimming financial year revenue outlook. The company now expects the revenue for the year up to the 30th of June to be in the range of $173 million to $182 million, down from April's forecast of $180 million to $185 million. Nuix cites uncertainties around expected license upgrades by existing customers and addition of new customers. Last week, Nuix announced termination of consultancy agreement with co-founder Tony Castanga. Meanwhile, the REA Group, Accent Group and Dexus are under the spotlight today. The REA Group announced that it has entered into a binding agreement to combine its Malaysia and Thailand businesses with leading digital proptech firm Property Guru. While the Accent Group has completed the acquisition of the Glue Store retail business and the wholesale distribution brands business of Next Athleisure. Dexus has upgraded its guidance for the 2021 financial year. The company forecasts distribution per security growth of around 3%. Moving on now, while the healthcare sector is the leading gainer so far today, the body scanning app maker Advanced Human Imaging hit a one-week high on a deal with Intercy. Advanced Human Imaging has signed a binding term sheet with Netherlands-based mental health and addiction care company 𝐷𝐸. Their technology will be integrated into 𝐷𝐸's Health Eye Check platform for an October 2021 release. Notably, Health Eye Check is 𝐷𝐸's preventative health screen iOS and Android app, which is scheduled to go live in June 2021 in the Netherlands. Moving on, funeral service provider Propel Funeral Partners shares have hit a 15-month high on a reorganisation deal. They've entered into an implementation deal with Propel Investments, manager of the company, to reorganise senior management functions. Under the deal, the company will pay a termination fee of $50 million to its manager. Well, it's time for a short break now. Stay tuned as I'll be back in a moment with some of the latest news from the cryptocurrency space.
At 𝐊𝐶INE TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. 𝐊𝐶INE TV.
Hello, this is Rachel live from 𝐊𝐶INE Studios. You're watching the early trades. And now let's look at why prices of cryptocurrencies are falling. Well, the cryptocurrency market continued a bearish trend on Sunday following a rollercoaster week of trading, with major digital currencies such as Bitcoin and Ether witnessing a drop in their value, triggered by a growing crackdown in China and rising environmental concerns. Bitcoin, the largest digital currency by market capitalization, fell below $35,000 in early trade on Sunday. That's amid a broader sell-off in crypto coins. The most popular crypto coin traded in the range of 33,464 to 37,320 in the last 24 hours, delivering a negative return of 3.95%. Bitcoin has seen a massive slump over the past 2 weeks amid warnings from Chinese officials to tighten regulations on cryptocurrencies, and also Elon Musk-led Tesla's move to halt payments over concerns about energy use. The price of Bitcoin is down 46% from the record high of $65,000 in April of this year. The crypto has lost a significant value due to a ripple effect of the digital market crash. In a similar trend, Ether, which is the native token of the Ethereum blockchain platform, dropped 47% from its all-time high of 4,382 it touched in May. Despite the recent slump, Ether has risen more than 200% since the start of 2021. The price of meme-based Dogecoin has tumbled almost 60% from its record high of 74 cents. In spite of recent losses, it still delivered astonishing returns of 6,300% on a year-to-year date basis. So what is causing the crypto market to fall? Well, the major reasons for the recent downtrend in cryptos are Tesla chief executive Elon Musk's confusing tweets and a crackdown on crypto regulations in China. China's central government vowed last week that it would hand out severe penalties for illegal financial activities, specifically targeting Bitcoin mining and trading. Tesla billionaire Elon Musk's various flip-flopping regarding the cryptos have also impacted the price movement. Earlier this month, Musk announced that Tesla would stop accepting Bitcoin as a payment for their vehicles, which left investors jittery. The SpaceX founder cites his reasoning for Tesla's decision to cease accepting Bitcoin as the damage to environment caused by energy-consuming Bitcoin mining. Adding to the woes, US President Joe Biden's budget proposal to include several new crypto reporting requirements further dampened investor sentiment. It's time now for a short break. Stay tuned. I'll be back in a moment to share a special report on Gina Rinehart, once again, the wealthiest person in Australia.
At 𝐊𝐶INE TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV.
Property by 𝐊𝐚ₐ. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest lowdown on the property market, tune in on 𝐊𝐚ₐ TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐊𝐚ₐ.
Hello, this is Rachel live from 𝐊𝐚ₐ Studios and you're watching the Early Trades. Despite many countries battling the economic collapse due to the COVID-19 pandemic, Australia's 200 wealthiest people boosted their collective wealth to $479.6 billion. That's up from $424.6 billion in 2020. The Financial Review Rich List includes 200 of the wealthiest people and families in Australia, placed by their personal net worth. The Australian Financial Review publishes the Rich List every year. The 39th edition of the Financial Review's Rich List is out, with Gina Rinehart once again wearing the crown of the wealthiest person in Australia, followed by Andrew Forrest. With the soaring commodity prices, the iron ore magnate Gina boasted a personal net wealth of more than $31 billion. Now, Gina Rinehart is well-known mining magnate in the Australian mining and agricultural sectors. Her wealth for 2021 recorded to be $31.6 billion, up from $28.9 billion in the 2020 list published in November last year. She is the executive chairman of a privately owned mineral exploration firm called Hancock Prospecting. Well, that's it for now. We'll have more stock-related updates for you in the coming shows. Please stay tuned with 𝐊𝐚ₐ TV.